All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is Wednesday, July 27, 2022. Happy Federal Reserve Day or FOMC Day. Today we get the announcement of our rate decision. The expectation is 75 basis points. Could we get 100? Possibly. Could we get 50? Not likely. It's probably more than likely going to be 75. That's kind of what I think the market is priced in, but we will see at 2 p.m. today, Eastern Standard Time. We have what else? We have the 2:30 press conference with Jerome Powell, who's the chairman of the Federal Reserve. So mark that on your calendar. I put the link up on Twitter for the actual FOMC meeting. So feel free to check that out at your own leisure. I'll be tweeting out all the headlines that I do see as we go along, and of course, seeing the price action. On Discord, I will send out all the headlines that I see from Bloomberg to the market blog on our Discord. All right, let's talk about it. Dow is up 164 points this morning. NASDAQ up 187, 1.55%. S&P futures up nearly 1%, 39.60. Russell 2000 up 0.72% at 1818. 10-year yields at 2.781. Dollar index 0.12%. Those two are we're going to be watching today very, very closely because the Federal Reserve policy will dictate where yields go and will dictate where the dollar goes. 1.74 to the downside for the volatility index or the VIX. Let's go ahead and take a look at crude oil quickly, and I'll bring up the other instruments as well. I'm going to try to do it just on one panel since I don't want it just in 4 panels. It looks kind of grainy on screen sometimes on YouTube. So as I go along, we're just going to do one panel at a time, even though I do a quad box. So crude oil kind of hovering around 95 bucks. Again, that's just because the dollar is kind of firm. I mean, we fell, but we didn't break 105. So crude oil has been kind of just sitting around. We do have crude oil inventories today at 10:30 this morning. I'll tweet that information out. No real edge here to trade crude oil or energy stocks. Break 90, I want to buy some more oil. Break above 98.71, we could talk about going to 105 possibly next. So as of right now, we're right in the middle, smack dab on crude oil between 98.71 resistance and 90.06 support. Let's go ahead and bring up the gold futures chart. Gold is down 0.16% this morning, 1714. We do have a gap to fill here as we did gap up on gold. 1716 is our gap fill level. So could we short there? Sure, short term. Why not? I'd rather not play futures just to short a couple of points on gold. Gold margins are a little higher than E-mini futures, as we know. So again, I expect possibly that we get to 1720, maybe post-Fed. We'll see that, with that 75 basis point hike, we'll reject this 20-day moving average and get us back down to 1720. We've pretty much been kind of staying in a base since the drop in early July. All right. Let's see here. Euro dollar, 101.39, 137.01 for dollar yen. Bitcoin is up 2.08%, 21,345. Ethereum, 1478, up 8% this morning on future side. Let's see if we get to 1500. And copper, up 0.12% this morning. Let's take a look at yields and why it's important. All right, let's go ahead and bring up the daily chart. And you can see we had that nice pop to 32.48. I want to go ahead and expand this so we can get an idea of how the market did the last time we had Fed hikes. That was in 2018. Look at the resistance that we had right as we got to this point of 3.25%. Remember, they were raising rates as they went along. This was in 2018. I remember trading 2018 that in December, which was extremely difficult because the market did fall in comparison. Remember, we had that correction as the Fed tightened. As we started loosening monetary policy, that's what created the bottom in yields and created the bottom in the stock market. That's around April. So you're starting to notice that we're kind of coinciding. As we get to yields going down, we could see as monetary policy was easing, yields were going down. We did kind of base for a little bit, and that was in the latter half of 2020. So with that being said, I do see that we have this possible double top on 10-year yields. Where does that put us? Well, if we're indicating on the CPI, we get that next week, or next month, excuse me, if we're indicating that we possibly get a slowdown in Fed hikes, again, a pivot, that's what I'm expecting. If we get some dissents in that report saying that some Fed governors are more dovish than as previously expected, then I expect yields to continue to go down. Now, the short-term yields are higher than the longer term. Again, we have an inverted yield curve because we have inflation expectations and tighter monetary policy, at least in the short term. Yet, Fed futures are pricing in rate cuts, at least according to Morgan Stanley Q1 of 2023. The bond market is kind of reflecting this in a way, rejecting of that top end tightening that we had in 2018 to 2019. So if we kind of look kind of forward thinking here, maybe if we break below 25.75, that would indicate that at least the Fed is going to slow, if not stop, rate hikes. And that's really your buy signal for the S&P. Let's go and bring up the same chart with the same exact setup. Bring up the weekly here. And I say this because it is Fed day and it is important to know. Okay, so we started tightening. We got to 2019 and we had this drop. Remember, we had the peak of tightening, and then that's when we started slowly getting rates going down. And then we had COVID. Slowly rates were coming down. April, right around the same time, right when they were announcing all the stimmy and all that stuff. It's money supply. When did we start maybe increasing rates? 25 basis points in March. Starting to go down. Now yields are slowing down. And now we're having a little bit of a pop. Again, eyes on the Fed. If they indicate that they're going to slow down or stop rate hikes, that's a signal that at least monetary policy is going to be loosening. We had this in August of 1982. That indicated a bottom in the S&P. So in a way, if you're a stock market bull, you kind of are hoping for a recession in a sense. I hate to say that, but you're at least hoping for the actual, the big R word, because that will give the green light to the Fed to cut rates, which is really dumb. But that's just the reality. Again, politics, man. Politics could be monetary policy, whatever. But that's where we are currently. So taking a look at S&P, kind of hugging that trend line to the downside. That upper band here, you see at 39.68. We had that inverse head and shoulders on Qs. We played that. Nice bounce post Google and Microsoft. As you know, Microsoft they have a great, really bullish guidance for 2023. That's propping the stock higher. We did fade a little bit. Got as high as 269. Google beat on ad revenue, but they missed on the top and bottom as we talked yesterday. So again, we're starting to see that, possibly bad news is priced in, or it's just technicals that we're bouncing on. We get a lot of earnings today as well. Boeing had a positive cash flow of $81 million versus the estimate negative cash flow of $342 million, and that's why the stock is higher today. EPS was a miss, minus 37 cents. You can see here, 37 cents on the EPS miss, negative, versus a 1 cent earnings estimate. $16.7 billion in revenue, that's a miss. So it's top and bottom line miss, but again, the cash flow, that's the key. They increased the 737 production to 31 per month. I can't even imagine that. 31 airplanes, that's almost more than one a day. Backlog of $372 billion, including over 4,200 commercial planes. So again, we are seeing demand, at least in terms of travel. We know how many flights have been canceled. Again, more planes. We're kind of transferring from buying stuff to doing stuff, right? General Dynamics, $2.75 beats $2.72 estimate. Revenue of $9.19 billion versus $9.39 billion. That's a beat on the top, miss on the bottom. Operating margin, year over year, 10.6%, up 20 basis points, and their backlog is better than expected. Sherwin-Williams, again, a good indicator of housing. Look how weak that was. Miss on the top, miss on the bottom. $2.41 adjusted EPS, $2.78 was estimated. So that's a miss. Revenue 5.87 billion to 6.01 billion. Let me go ahead and retweet this oil futures. Fiscal year, $8.50. Again, that guidance is a miss as well. PayPal soars 6%. Activist investor Elliott has a stake. So that's some news there. I kind of want to compare that to Pinterest, as we saw with that kind of same headline. And what happened? We got to 24, gave it a couple of days, and we faded. What will happen with PayPal? More than likely the same. We'll probably just roll over. If that's the case, we'll probably get a pop, early. Pop today, maybe. So let's see if they have any technical edge that we could play here. We are now at 82.69, right above this trend. There is a gap to fill. Nope, no gaps. And this is the daily chart. You have resistance at 89.27. If we can hold above 82, guys, then PayPal might be worth a shot to 89. You may want to buy maybe a week or two time for that one, just based on that report. In terms of the market, let's take a look at QQQ together. Again, we played that inverse head and shoulders. We're retesting that yellow line, which was the previous support. Now the question is, do we roll back down or do we come back up? Maybe a possibly small little inverse head and shoulders. Maybe we should go higher. I expect that we do go higher, actually. I think we go higher ahead of the Fed, and then we roll over post-Fed, meaning more than likely tomorrow. So let's not get too excited on any kind of stuff happening unless the keywords are saying pivot, pause, or slow, meaning hikes. If we can get those kind of words, that's what we're looking for in terms to go higher if you're a stock market bull. Now, if you're a stock market bear, you're saying Powell's like, we are not convinced that inflation has been beaten. We will continue to raise as we go along. Then we're just going to retest 3,900 on S&P easily and possibly to 38.25. Either way, we will be ready. Up or down, it's all opportunity. We'll leave it there, guys. Have a great rest of your afternoon, and I will see you guys at 5 p.m. Eastern Standard Time for the aftermarket recap. We'll dissect the Fed and see what happens going forward with earnings today as well. Cheers.